Hey, what's up guys? John here. Home builders have went from being extremely optimistic about the future to pessimistic, then optimistic, and now they are extremely pessimistic about what's going to happen next. Homeowners, they think, hey, I got a 2% mortgage, 3% mortgage, 4% mortgage. I don't need to sell. This is free money. I'm going to ride this all the way to the end of this 30-year mortgage. But there's some very interesting things happening behind the scenes that I think are going to completely restructure property values in America. And I think we're going to be walking into a huge buying opportunity if you're thinking about investing in real estate. And I think we're going to see a lot of homeowners walking away from their properties and a lot of real estate builders and developers going completely bust coming very, very soon. I'm going to break down the facts that the media won't talk about in this video. Please hit the like button. When you hit the like button, YouTube will share this content to educate the people about what's really going on. And if you want to fix your credit, you want to position yourself for the greatest wealth transfer of all time, you're going to need to position yourself to where if you were a bank, you would want to lend you money. If you have bad credit or even average credit, which is a 698, an average FICO score in America is a 698. If you have average credit, it's as good as having bad credit. You're going to want exceptional credit, 770, 780 credit score. So where you see that incredible investing opportunity, you can go out there, speak to a lender, everything will check out. You know, of course, you need to have the income, but income and great credit puts you in an incredible position to go out there and invest. We'd love to help fix your credit at greatcreditfast.com. That's greatcreditfast.com. Go there, schedule a free strategy session. See how we can help you. Don't let one late payment get in the way of a bright future. One late payment can drop your score upwards of 180 points and stay on your credit report for upwards of 7 years. 7 years is unbelievable what one or two little situations could do to your ability to get financing. Take a look at this. So, home builder sentiment plunges again and amid spike in mortgage rates. Came out this morning, right? And so Redfin CEO says that the housing market has hit bottom. How has the housing market hit bottom? If you look at the payments, look at the monthly payments for a mortgage. This is from Apollo from 2008. Right? 2008, then comes along 2020, 2021, monthly payment is about $1,500. Now it's $3,000. So in the course of about a year, almost 2 years, about a year, the payment has essentially doubled, but yet incomes have softened. Incomes have actually fallen in some careers. So you're starting to see incomes soften, but the cost to own a property double. When has that ever happened and that's been stable? Never. Never in history. If you look at where mortgage rates are today for the average borrower, average credit score, again, 698, it's 8.398%. Now, I know someone in the comments might say, hey, John, I can get a mortgage for 8.2% or 8.1%. Sure, maybe. If you have an incredible credit score, you could probably get a 7.5% or an 8% mortgage, right? If you have incredible credit. But if you're the average borrower, you're probably looking somewhere around 8.1 or 8.4%. So for context, a $419,000 property, which is the average property price in America, you're looking at a down payment of about $25,000. The average down payment is 6%. And 30-year fixed rate at 8.2%, you're looking at $4,000 a month. That is absolutely insane. Now, to meet Apollo's data here, about $3,000 payment, that would likely be a 20% down payment, and it would probably consist of a much higher or much lower purchase price, probably somewhere around $400,000, possibly less. Yeah, about $350,000 purchase price. So in many locations throughout America, you're not getting a property for $350,000 or $375,000. Instead, you're going to be spending $500,000 or $600,000 if you live in Florida, if you live near any city. So on a property price of $500,000, with 20% down, you're still looking at $4,000. With $100,000 cash as a down payment, how many people have that? Right? Not many people. If you put 6% down on that property, almost $5,000 a month. So that's where we are. But look at this. Home builders are sitting on so much inventory that they're actually competing. They're able to compete with existing homes. And that's never happened before. Where existing home, an older property, now has to compete with a brand new property and they can't compete. They can't compete. Look at this. Old homes in the U.S. now cost just as much as new properties. This couple's brand new home costs less than an existing house. Why a brand new home, brand new build is a better deal now, right? This is where we're walking into. But look, August 2023, last month, there's only 669,000 properties, active listings in America, right? 669,000. no inventory essentially, right? Everyone knows that. But now there's 461,000 units expected to be built this year, right? So you think about that. If you have 669,000 in listings and you just add 100,000 properties, 150,000 properties, what would that do to the supply-demand ratio? What would happen in terms of pricing? Obviously, prices will continue to soften because there's less available buyers that are going to be able to come out there and qualify for a $4,000 mortgage, right? There's going to be less available buyers. And so as the job market starts to get softer and softer, what are we going to start to see? We're going to start to see people being more motivated to sell these properties, right? The market's going to continue to soften. There's no doubt. Look at all these different layoffs that are happening in all of these different careers. It's going to be very fascinating to witness. And just for context, in 2023 so far, just in tech layoffs, over 235,000 layoffs. In 2022, you have 164,000. Now, I would say conservatively, we're probably going to have somewhere around 400,000 layoffs by the end of the year because we will be stepping into a likely higher interest rate environment, and we're going to start to see a lot of businesses look to pull back some of their risk. And I think we're going to continue to see these layoffs persist throughout the end of September, October, November, December. We still have 4 months left. So it's not impossible to say we'll probably be somewhere around 375 to 425,000 layoffs just in the tech sector. But as this is happening, I think this is going to be a very, very unique thing to witness here, is the student loans. Student loans are due in 10 days. In 10 days, they are due. And the average for someone with a master's degree is $584 per month. And if you have a bachelor's, $284 per month. How many people can afford this? How many people? Well, this is very fascinating as well. 72% of student loan, they say they don't own a home. 37% of first-time buyers have student loan debt. So you start to think about this. 40% of all mortgages in America were taken out between 2020 and 2021. Record low interest rates, record high home prices. Many of these buyers thought that they were going to live in that new location, that new home, forever. They were going to be there forever. And many of them, maybe they will. But the big question becomes, how can they survive if the job market softens, inflation goes up, property taxes go up, and now they're hit with student loans that haven't been due in years? Well, I don't think many of them are. I think what's ultimately going to happen is we're going to start seeing people defaulting on their bills, credit cards, mortgages. We're going to start seeing personal loans. And as these defaults continue to get much, much worse, come November, come December, as holiday and travel time starts to step in, people will accumulate more and more and more debt and more expense. And at that time, we're likely going to continue to see interest rates remain elevated. So you just look at the numbers. What's ultimately going to happen? Banks are going to pull back on lending. Homeowners are going to be pushed into a situation where they can't refinance their properties because they have a 2% or 3% or 4% mortgage. And they're likely going to be pushed into a situation. Are they going to have the cash to weather the storm? Sure, a lot of them probably will. But even if it's just a small percentage that can't, at the same exact time, all this new home inventory is hitting the market, and you're having home buyers that simply can't afford to buy these properties. They can't afford to qualify for a mortgage. They don't have the money coming in. What's ultimately going to happen? Prices are going to soften. And sometime next year, you're going to have $2 trillion in commercial debt that has to get refinanced. Commercial debt from businesses has to get refinanced next year. So how are they going to do this? More layoffs. That's what they're going to do. They're going to cut costs, cut expenses. So when we look at this housing market, and I was just in Los Angeles 2 days ago, looking at property prices in the Hollywood Hills and in these areas, you're starting to see a lot more price reductions. You're starting to see sellers become more realistic. They want to get these properties sold. You're seeing this for the first time in a very, very long time. The last couple of years, homeowners, they were controlling everything. But now home buyers are almost non-existent. So when you're looking at this, I believe you're looking at a completely different economy. You're looking at a completely different real estate market, and you're looking at a completely different consumer. A consumer that's no longer looking to buy and invest in real estate because they need to. But what we're going to start to see is people, they're only going to be able to buy and invest in real estate if they have so much money, cash, liquidity, strong income, and they're in that top pinnacle position to where it's, they would like to. right? That's what's ultimately going to happen. We're going to start to see something really, really big unfold in the housing market. And I think it's going to be a generational opportunity where you can build wealth that you can pass down from generation to generation if you're smart, savvy, prepared for this massive storm that's coming. What do you think about this? Drop below, hit the like button, add me on IG. And if you want to fix your credit, you want to position yourself for the greatest wealth transfer of all time, you're going to need great credit. You're going to need great credit. If you want to get a personal loan, maybe a business loan, you want to do something, you want to make moves during the chaos, you're going to need great credit. Go to greatcreditfast.com. Click the link below in the description. Schedule a free strategy session. See how we can help you. And I'll see you guys in the next video.